Investors, Realty Income has yet to give us dividend investors anything as of late worth our investment. I mean, come on. It's down by over 3% within the past handful of days, down by over 4.2% over the past month, over 21% if we're talking about the last 6 months, and a staggering 23.18% down year to date, with its price hovering below $50 per share. So, is this monthly paying dividend stock even worth our investment right now? Is it entirely finished, or is it a massive buying opportunity for the longer term value investors out there who are simply willing to remain patient? That's exactly what I want to go ahead and discuss today, and also just put onto your radar that yours truly has secured an interview with a Realty Income executive for Masters of the Market to grill him on the company's future. So stay tuned for that interview, but for now, let's just dive right in on Realty Income. So first and foremost, before we can even get into Realty Income's metrics, we need to understand 3 crucial components when it comes down to evaluating whether or not this real estate investment trust is a buy or flat out bust. The first is the company in and of itself, meaning you have to come to understand their business and all the ins and outs of their operations. Secondly, we have to really familiarize ourselves with our economic backdrop because, as I always share, macros certainly do matter. And finally, as investors, we need to at least be aware of the balance sheet basics to determine the health of this real estate investment trust. Now, we're going to go ahead and get started with a simple overview of the company. And while many of us dividend investors are probably familiar with Realty Income, there's one element that's often overlooked, but it has me hooked on their business model. With that said, Realty Income, since its founding in 1969, has essentially built itself up to be an industry leader when it comes to Net-Lease solutions. And right there's the hook, or the key rather, within the term Net-Lease, because that means that Realty Income's tenants are responsible for all the associated costs to the properties that they lease out. We're talking about literally everything is on the tenant. Now, why is that key? Because it saves a heck of a lot of money for Realty Income. In other words, just imagine buying a house and then immediately renting it out and having the tenant pay for absolutely everything associated with the property, from the taxes to simple and major repairs, as well as all the property maintenance. The property becomes your biggest asset without any incurred costs to you. It's literally the safest of bets that you can make. Now, when it comes to Realty Income, after they amassed the largest portfolio of single-tenant commercial properties totaling out to over 13,000, we really do have a money printing machine. However, have a look now here at some other important numbers in regards to their portfolio snapshot, where we see that Realty Income has maintained an above 98% occupancy rating despite all the market volatility in the last handful of years, meaning their tenants are locked in and just continue to make their monthly rent on their lease spaces. We also see that Realty Income is a fortress worth of diversification with over 1,300 clients across 85 industries, meaning they're very unlikely to fail all at one time, granting you, the investor, more safety. Now, on top of all of that, Realty Income has been expanding well outside the United States for even more diversification in now the global markets. But if their business checks out, then why the heck are we even debating whether this stock is a buy, hold, or a glaring red flag of a sell? Well, in short, investors have been watching Realty Income's lackluster performance over the last handful of years as the stock has really just been residing in the red. Whether it's over the last 5 years down by 15%, last year down by 16%, or of course this year now down by over 23%. So what gives? Well, here's where we have to take a look at the macro picture and why macros remain incredibly important to understand, because Realty Income's business, at least in my opinion, is very safe. I mean, after all, a brief glance into their balance sheet depicts its health, as we can see total assets just south of $50 billion and their liabilities hovering around $20.83 billion, leaving a difference there of $28.84 billion should anything within their portfolio go awry. And moreover, we can even see their debt to assets over the course of time here, with their assets notching up year over year while the Realty Income team just maintains or minimizes debt. This all means the biggest emphasis or scrutiny must be put on the macro environment in order to understand what really is going on with the stock. And investors, it all comes down to interest rates. As I've previously shared, when it comes to really all real estate investment trusts, they're all suffering because the Federal Reserve remains hawkish with an agenda that points to higher and higher interest rates. Now, that all matters because a few years ago, when rates were zero or just a notch above zero, firms like Realty Income were on a buying spree, scoring more and more properties while they could. But now now we fast forward to where we are today. Rates have increased, and many firms prove that they really couldn't financially manage all of that debt while still showing signs of future weakness. And we get shareholders across the board who are just petrified and afraid for their lives that these companies won't be able to manage the debts or pay them back. Here we are with a ton of sell-offs, but here's where I got to say that Realty Income in and of itself has proven itself well, especially during trying economic times. Now, how about we take a look into what analysts are saying, as we see plenty of optimism with over 32% worth of upside expected, coming to a share price of $65.10 per share. On top of that, smart money seems to be a buyer of Realty Income as well at this point in time too, from hedge funds like Maverick Capital, Atwater, and Chief Brock Investment Advisors buying more shares of Realty Income last quarter. In addition to all the average Joe retail investors, at least across tip ranks, finding Realty Income to be the buying opportunity of a lifetime right now. However, we are, of course, as dividend investors, all here for dividends, especially when they're paid out on a monthly basis, to which Realty Income comes in stronger than ever with over 25 years worth of consecutive dividend growth at a 5-year growth rate of 3.7%, leading to a current dividend yield of 6.22%. Not too shabby if you're asking me, to which I think it's a buy, but now I got to ask you whether or not this REIT is a buy, sell, or just simply a hold for now. Let me know down in the comments below, and if you found this video to be insightful, you're going to enjoy this one right here as well. But before you go ahead and click away, definitely be sure to subscribe to never miss a single dividend stock idea.